Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me for this segment, we have Mark Marex, Director of Index Research and Development at Nasdaq Investment Intelligence, to discuss the methodology behind the Nasdaq Next Generation 100 Index, how its constituents approach R&D spend and patent activity. Mark, it's great to see you as always. Welcome back to Trade Talks. Give us a brief overview of the index and how it's composed.
Thanks so much, Jill. Great to be with you. Yeah, this is one of my favorite indexes to cover because I think it really helps tell the story of what makes NASDAQ unique as an exchange. And then by extension, sort of what makes all of our NASDAQ branded indexes so unique. We talk a lot about the NASDAQ 100. Obviously, it's our bread and butter. In many, many minds, the world's preeminent large cap growth index, been around since 1985. We launched the NGX, which is the Nasdaq Next Gen 100 Index, back in 2020 to give investors basically a tool to track a complementary mid-cap extension to the Nasdaq 100, where a lot of high-level similarities exist in between the two indexes. You can really think of them as a package deal. And the methodology is quite simple. Actually, in many ways, simpler than the Nasdaq 100, because in terms of weightings, there's only one condition you really need to keep in mind, which is that it's market cap weighted, but it has a single security cap of 4%. So quite a bit simpler than the Nasdaq 100 weighting methodology. And so basically, just like the Nasdaq 100, we're excluding financials. All other sectors, all other industries are eligible for inclusion in the index. You just have to be listed on the Nasdaq exchange. And you cannot be part of the Nasdaq 100. It's looking at the next 100 largest companies after that, which tends to fall much more within that sort of mid-cap size bucketing. If you look at the history of, when we ran the back test going back to 2010 for this index, who would have made it in, who would have made it out, you find a very, very consistent pipeline, a sort of feeder into the Nasdaq 100, companies that are rising through the ranks of mid-cap. And as a result of that success, find their way to graduate into the Nasdaq 100 at the end of each year when that annual December reconstitution takes place. So what have we seen since 2010? 80 total names from the Next Gen 100 have graduated into the Nasdaq 100. Those include some well-known examples like Netflix all the way back in 2010, Tesla in 2013, DocuSign in 2020, AstraZeneca in 2022. And if you look at the Nasdaq 100 today, 39 of the 100 companies there currently have graduated from this Next Gen 100 index at some point over these past 10 plus years.
Well, this is really exciting. We could be looking at one of the next Mag 7s here, Mark. So let's take a look at the market cap of these companies within the index and some of the countries where they're domiciled.
Yeah, so obviously, it's going to tilt much, much smaller than the Nasdaq 100. But it's still kind of give you kind of meaningfully above the S&P Mid-Cap 400 in terms of whether you look at this on an average or weighted average or median market cap basis. It's kind of closer to what the Russell Mid-Cap Growth is going to give you because it tends to be more of the growth segment within the mid-cap sort of spectrum of companies that are listed in the U.S. And the other thing I think that's unique about this index, it gives you a sizable international allocation. NASDAQ as an exchange attracts quite a bit of internationally listed companies. ARM was the big one that IPO'd over the past year on NASDAQ. And so, you don't have to be US headquartered to make it into this index. You just have to be listed on the exchange and ranked within that next 100 market cap ranking. So actually, as of today, we've got 16 non-US headquartered NASDAQ listed companies as part of this index. So a nice kind of diversifying feature there in terms of not being fully US based in terms of the exposure.
And let's talk about industry exposure here. What does that look like?
Yeah, so this is the other thing I think that's really cool about this index. We spoke about the 4% capping on the individual companies. It's actually very rare if you look historically that cap even needs to be put in place because of the much more narrow sort of range of market caps for the companies that fall into this index. You tend to top out at around 2 to 3% each in terms of max position size. So you're never going to have the type of concentration at the very top of the index that you might find with the Nasdaq 100, where companies regularly exceed, 10, 11, 12% individual weightings, like we've seen over the last few years with the likes of Apple and Microsoft. The other thing is that the sector concentration is much less. So the Nasdaq 100, depending on which system you use, 50 to 60% tech exposure pretty much at all times. NGX is about half of that. It's around 30 to 35% tech, depending on when you take the snapshot. That is, though, just like the Nasdaq 100, a pretty big overweight compared to competitor benchmarks in the mid-cap space. And then with that lesser tech exposure, you get a lot more within healthcare and similar amounts within consumer discretionary. So in terms of sort of those top three, it's very similar, 75 to 80%, those new economy, innovation-driven sectors across tech, healthcare, and consumer discretionary. It's just that the balance is a little bit less tech, a little bit more healthcare, and then a little bit more industrials too versus the Nasdaq 100, but underweight versus the other mid-cap benchmarks.
And Mark, let's look at one of my favorite metrics that you pull, because we've done this before with the Nasdaq 100. What about R&D spend?
Yeah, so there's a lot of different ways to look at it. This is maybe the cleanest way, which is to say, look at R&D expenditure as a percent of top line revenue. And we plot this out every year going back to 2010. You'll see in the blue there, the Next Gen 100 consistently spending 3 to 4 times as much as the broadest mid-cap benchmark out there, the S&P Mid-Cap 400. But even versus the yellow, the Russell Mid-Cap Growth, you're very consistently spending 1.5 times, sometimes 2 times or even more, the ratio of top line revenue getting reinvested back into R&D. And so when we say that this is a natural extension of the innovation suite that's anchored by the Nasdaq 100, we're not just using sort of catchy buzzwords for this. We really do mean it in terms of how much of a focus there is on R&D across the index.
And finally, Mark, let's talk about patent activity.
Yeah, so this is just another lens, another angle to take with respect to kind of delving into that innovation exposure argument. And so what I've shown you here on this first slide on the left-hand side, that's the distribution of patent filings over the last year across 32 different areas of disruptive tech that we track patent activity for. Anything that's shaded as purple relates directly back to AI, artificial intelligence. So we have sub-indexes that track companies that have exposure to AI themes in particular. That's how we can map this out. But pretty incredible to me that for something like image recognition and deep learning, you've got 20 to 25% of global patent activity in those disruptive tech areas coming from Nasdaq Next Gen 100 companies. And you can see a lot of these other ones really punching above its weight, given that it's only 100 companies out of maybe 20,000 global publicly listed companies that we track, giving you 10, 15% or so exposure to some of these really key areas of innovation. On the right-hand side, that's just a quick visual way of seeing, okay, of the 50 or so companies in this index that have disruptive tech patent filings, where are they active in more than one area? Right. So there's a number of companies that are active in 2 areas, in 3, about 10 companies each. And then there are some that are active in as many as 12, 13, 14 different areas all at the same time. Companies like eBay, like Western Digital, like Baidu. They are very, very much from an innovation perspective, giving you the type of broad exposure to innovation that the Nasdaq 100 does, and very likely the types of companies that could graduate someday into the Nasdaq 100.
All right, Mark, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.